This video is about Chapter 2 of Canadian Income Taxation Planning and Decision Making, 2023 edition, by authors Buchwald and others from McGraw-Hill Publishing. Fundamentals of tax planning is legitimate arranging of financial activities in a way that reduces or defers the related tax cost. Legitimate is the tax authorities that do not attempt to prevent certain transactions. GAR is general anti-avoidance rule. Tax evasion is knowingly failing to report revenue, claiming the deduction of a false expense or both. Tax avoidance are transactions planned and carried out mainly to avoid, reduce or defer tax payable under the law. Types of tax planning are 1. Shifting income from one time period to another. 2. Transferring income to another entity or alternately tax paper. 3. Converting the nature of income from one type to another. It is necessary to determine future tax rates or income levels that will cause those tax rates or both. Discretionary opportunities within the tax system. And time value of money. We will look at a tax planning example. We have corporate profit for year 1 currently set at $150,000. We have a drop-down menu for selecting to claim deduction or not. If we select yes, then we get the calculated output for the profits and tax increase. If we change the values for any of the inputs, the calculated values change dynamically. This is now where we code our Streamlit application. In the text editor, create a new file. Name your file chapter2.py. First thing we do is type import Streamlit as st. Notice that we a st.divider. That literally puts a horizontal line which helps segment your sections in an application. Just like regular Python multi-line comments, we have 3 double quotes with 2 hashtags. The text inside the triple quotes is rendered as Markdown when using Streamlit. You can create functions just like previous videos. We create a function called tax planning example. The CP1 and CP2 are just variable names for using Streamlit columns functionality. We will be using this quite often in this app and series. You can call these variables whatever you like and can even reuse the name in other sections. As you can see, there is many code lines commented out. This is to show that you can modify your existing Python code into Streamlit app functionality with minor effort. The first number input is the corporate profits for year 1. The first number input is the corporate profits for year 1. We need to set a minimum value. Next is the account receivable number input. We set the min value to 10,000. We add the step argument which will increase or decrease the number by that value. We add another corporate profit number input for year 2. Min value of 100,000 and a step value of 100. Next we have our column variables tr1 and tr2. St columns with a value of 2. It is important to have column variables match the numeric value given. Tax rate 1 and tax rate 2. St number input, with min value set at 10 and the value is divided by 100. The comment shows the values used in the textbook example which we will copy and apply to our app. Calculating the options. Both options multiply the accounts receivable by the tax rate. Then the tax reduction is option 2 subtract option 1. Here is where we use stmetric function. This function shows the numeric value in the column sections nicely. Inside the metric function, we have our label called tax reduction. The value has a f string which helps format the numeric values. Next is the deduction claimed. This requires user to make a selection, and we do that by using select box. Inside select box we have claim deduction as the label, and our options are inside a tuple of select option, no or yes. Based on user selection, we calculate the profits in options. If user selects no, then profits are calculated by corporate profits for year 1 plus accounts receivable. Option 1 is accounts receivable multiplied by tax rate 1. Column variables DED1 and DED2. We use the metric function to print the profits and tax increase. If user select yes, we can reuse the column variables. We calculate the profits for year 2 naming the variable profits 2. Corporate profit year 2 subtract accounts receivable. Option 2 is accounts receivable multiplied by tax rate 2. Tax reductions are option 2 subtract option 1. And option 1 subtract option 2. Inside the first column variable we set the tax deduct variable to corporate profits for year 1. Subtract accounts receivable. Using the metric function we show profits for year 1 and 2, including F formatting for 2 decimal place values. We repeat the process but under the second column variable. For the tax increases and pass in option 1 and option 2. Lastly, we have a conditional statement to check which tax reduction is bigger. Then show the corresponding year and value. And last thing is to call your function.